So I'd like to introduce Ali Hussein, Fintech Association of Kenya chairperson. Ali Hussein, karibu on stage. A round of applause for Ali Hussein. Another round of applause for Ali Hussein. Karibu sana. Now, Ali Hussein is a serial entrepreneur, regular commentator, and contributor on all things tech and the policy and regulatory landscape that straddles this sector across Africa, and Africa in particular, and the world in general. What keeps him busy full-time these days is consulting on digital transformation, working on his fintech startup, podcast, and vodcast, hashtag AliTalksTech. Yeah? Ali has served and still serves on several boards, both in the private and public sectors. He also gets great satisfaction by mentoring and investing in tech entrepreneurs across Africa. Another round of applause for Ali Hussein. So Ali Hussein will be taking us through this discussion on fintech pioneers and challenges, a discussion on how economic downtimes build resilient fintechs. And so Ali, over to you. You'll invite your panelists and then proceed on with the conversation.
Thank you. I hope I can be heard. Let me bring to the stage my good friend, Leon Kiptum. Leon is Senior Vice President East Africa at Flutterwave. For those who may not know Flutterwave, one of the leading fintechs in Africa. And Daniel Kiriungi. Daniel is Chief Operating Officer at SasaPay. Daniel, karibu. SasaPay is one of the youngest fintechs in Kenya, and you will be hearing quite a lot about SasaPay. Now, on a light note, we tried very hard not to make this into a manual, but unfortunately, we were not successful. So don't blame me, blame Rita. Rita, I've thrown that ball to you. So guys, today morning, really we want to have a conversation around fintech pioneers and challenges, and to discuss how to build resilient fintechs in these economic downtimes. One of the things I always like to say is that during tough times is when great brands are actually built. I always also like to start my panels with a brief introduction from my panelists and their opening statements. So let's start with Leon on my left side. Leon, introduction about yourself and your opening statements on this interesting subject.
Thank you, Ali. As said, my name is Leon Kiptum. I am a business leader in the fintech world. I have been in this space for quite a number of years now. Currently as a Senior Vice President for Enterprise Sales in East Africa. So leading that piece of the business, as well as setting up the different markets of East Africa. That's Kenya, Rwanda, Tanzania, and Uganda. As far as Flutterwave is concerned, we've built a payments platform that is now live in 32 countries in Africa. We have managed to drive the volumes that are traditionally moved in other forms of payments to our platform, about $25 billion of total processed volume since we set foot in Africa. We are African founded, of course, and the other piece of that business is that we process almost 400 billion transactions in one particular month. So it's quite a robust business that we've set up, enabling us to move money across borders and across different currencies. Now, speaking into the topic that we have today, economic downtimes. When I look at why we are where we are today and why fintech has become the kind of discussions that we're having today, a lot of it was propagated by the need to address specific problems that are facing us in Africa. a number of those problems related to the fact that we are largely a cash economy. And whether we like it or not, I know some people will say that a lot has changed, but it's still almost a 90% cash economy across Africa. So that is a problem that needed to be solved because the cost of moving money obviously increased as the economics and the dynamics around the economies of the different countries changed. So what is the solution for that? Move it to digital as much as you can. And that is why solutions like ourselves begin to thrive, because then we are solving that problem, addressing the issue of the cost of money. And then talking into, and really just getting to my opening statement around
yes, go on.
Talking into that as well, then the question we begin to ask ourselves, then how do we innovate around those problems that are facing Africans in Africa? Because that is what it became about. But then you also remember that you have Africans in other parts of the world who are looking to move money back home. So what we've done at Fluttering is we've built 3 or so robust answers to these questions. The first one being, as a business, as a global merchant that is trying to do business across the globe, and you need to collect, receive payments, you need to pay out, you need to make payments, you need to collect and you need to pay out. How do we solve that problem for you? In the middle of volatility in currencies, then what then we've been able to do is to build a platform that enables you to move money, but we don't move the money, we move instructions. When you really think about how things work in the fintech world, it's not the money that moves, it's the instructions that move, because then you need to be careful that you could lose money in the middle of this craziness of currencies. If you look at the Kenya shilling today and what it was barely a year ago, would you really want to be moving around money or really want to be moving around instructions and you have someone who takes the risk? And that's what we do. We take the risk because of that dynamic in the economy. That obviously puts us direct in the discussion of currency deals and being able to make sure that we are part and parcel of FX discussions for our global merchants. And then the third piece of that is you've got individuals who want to send money either back home or across Africa. So there's 2 discussions. You've got the discussion of the individual in the United States, in the UK, in Canada, who is an African working there, living there, or studying there, and would like to move money back home. Then we provide that solution as well. But the biggest discussion now is the intra-Africa piece of it, because Africa is opening up for Africans across, and Africans are doing business with each other a lot more than they were before. If you look at the AfTA agreements that opens up trade in Africa and all that. So it begins to change the dynamic, but that doesn't change the fact that the economics around the different countries is things are difficult, things are more expensive. And if things get more expensive, the cost of money rises. So when you really think about it, what we're trying to do is to solve the problem of the high cost of money by making it easy to move money around without incurring ridiculous costs.
Leon, thank you so much for that short but very informative opening statement. I'll come back to you on a couple of things. And now I turn to Daniel. Daniel, SasaPay is probably one of the newest kids on the block, starting to make waves. So over to you. Introduction about yourself and SasaPay, and particularly address the subject at hand today.
Fantastic. I thank you and good morning, everyone. My name is Daniel. I've been in the fintech for quite a long time now. I would say, I think about 16 years in the payment space, and recently now joined SasaPay as the CEO to come and, take this brand to the next level. Basically, SasaPay, I would say, was the 4th fintech or the 4th company that got the license from central bank to hold money in terms of a wallet that can actually hold value in the country. Say for M-Pesa, which belongs to Safaricom, Airtel Money, which belongs to Airtel, T-Cash belongs to Telcom. SasaPay became the 4th that was able to do everything that those other wallets were doing, but without necessarily belonging to any telco. So usually say we are telco agnostic. So anybody who has a mobile phone can actually get a SasaPay wallet and be able to transfer money. Coming to the topic of the day, I think it is always good to sometimes face those challenges like the ones that are now currently in the country, because history has taught us that it is during the tough times that people innovate. It is during the tough time that people actually try to think what exactly matters to the customer. At Sasapi right now, we are looking at how exactly do we become the choice of the market in getting paid and also in paying out. Recently, in a certain group that we usually have conversations with, these two gentlemen are also in it. Someone came and gave an example that if today I had 1,000 shillings on my hands and I hand it over to the first person here, and they keep giving it to the next person, to the next person, to the next person, by the time it reaches the person seated at the end of the hall right there, they will still have it as 1,000 shillings. Then someone said, if I sent 1,000 shillings to that lady seated here, and now she was to send it to the next lady, and then next month, by the time that money reaches that guy at the end, will it still be 1,000? Will it? So, guys, the question here, therefore, is how then does fintech actually compete with cash, because cash is actually our biggest competition, and convince the market that it's actually worth to actually move money in digital? It is during now these tough times that even as Sasape we are saying we don't believe anymore that people should be paying too much, exorbitantly much, to actually send each other money. And we have come up with very innovative models that are actually removing the cost from the payer, and through collaboration, through financial service institutions and all, we get another better way of monetizing the money movement. So with time, and we believe that within the next few years, people moving money to each other will be actually free, and we are going to be able to monetize that through layering of other products on top of each other. So whether you are receiving money from out of the country to Kenya, or you are moving money within the country, we are coming up with models that will ensure that the customer actually is the biggest beneficiary. And just like it is easy to move money for free when it is in cash, despite, of course, we know the challenges that comes with that, then how can we bring that experience also in digital, but still be able to monetize the whole ecosystem? And therefore, the biggest take for me of how fintechs become resilient during tough times is that they are forced to innovate better, they are forced to collaborate more, and I think we'll be opening up, unpacking that whole conversation of what is this collaboration, what is this innovation, and what does it actually matter within the, in terms of building resilience. And I think those are some of the conversations we'll be having. So, ladies and gentlemen, welcome to Sasape, where every coin matters. Yeah, you can clap, it's allowed.
Thank you, Daniel. I think you've started pinpointing some of the issues that are being faced today. A couple of years back, maybe 2 years ago, I participated in a McKinsey report that started looking at the fintech ecosystem across Africa. And maybe let me just read a small snippet of that report. Between 2020 and 2021, the number of tech startups in Africa tripled to around 5,200 companies. Now, those are the ones that were documented. The ones that are not documented are probably double that. Just under half of these are fintechs, which are making it their business to disrupt and augment traditional financial services. McKinsey analysis shows that African fintechs have already made significant inroads into the market, with estimated revenues of around $4 billion to $6 billion in 2020, and average penetration levels of between 3 and 5%, excluding South Africa. Now, you know, in Kenya, everybody in this room here today, or at least I can almost guarantee more than 90%, is using or has used mobile money. And when you use mobile money in Kenya, we know who you are using. Do we even need to have that conversation? the point of the matter is financial services today is basically layered on top of mobile money. What we are then now seeing is that people are starting to ask, these costs, these mobile money costs, as Daniel has talked about, are they sustainable? What is the next stage? Leonia has talked about the fact that despite the penetration of digital financial services or fintech, cash transactions are still the majority. So, on one side, we are seeing so-called disruption. On the other side, Daniel is saying, no. We are not competing with anybody. We are competing with cash. Or, as my brothers and sisters from Central will say, fari. We are competing with cash in your hand. So how do we move that metal one step further? So it's not even just about different players looking at markets and saying market share. We are saying 90% of transactions are still in cash. Leon, over to you.
It's so interesting, and in fact, what Daniel has said, very interesting, because the misconception is that the competition is between the fintechs. That's
the banks.
And the banks.
And the telcos.
That's a misconception. We have a $5.6 trillion business and consumer potential spend in Africa today.
Can you repeat that number, please?
That's a McKinsey analysis.
5.6 trillion.
Consumer and business spend potential in Africa today, right? We are arguably one of the biggest fintechs in Africa today, flatly. But we are talking about a TPV of $25 billion.
Okay, as techies, sometimes we get ahead of ourselves.
Total processing value.
Thank you.
The total processed value by Flutterwave today is $25 billion.
So you're not even scratching the surface.
We're not even scratching the surface of the $5.6 trillion potential. So the argument that the competition is between banks, fintechs, and telcos is actually a flawed argument. The majority of this money is still circulating as cash, right? Cash comes with its challenges. And in fact, the more the cash in the ecosystem, the higher the cost of money, right? So in a situation where we are talking about economic downtimes, I think every African government should be thinking about how much value do you move into the digital ecosystem as opposed to it sitting in the cash economy. Yeah, and it's probably how you begin to solve that problem by thinking, by changing the thinking to say, oh, all these fintechs are getting funding, all these fintechs are coming to compete with each other. This cake is so big. There's not one or two fintechs that can finish it. The issue is, what is the problem that we are trying to solve as the fintech startups, founders, fintech operators in Africa today? Banks have done their part, and they have solidified what their market is, so to speak. I wouldn't say they've reached their glass ceiling, but they have reached a fair level of innovation that can only be taken up by entities like ourselves.
So basically what you're saying is that banks have stopped innovating. It's fintechs now who...
Fintechs are now taking to the next level. Banks have not finished innovating,
okay,
right? But if they work, if you look at it today, we cannot work outside of the banking ecosystem. As fintechs, we can't.
Correct.
We still have to partner with them. We still have to operate our businesses within the banking ecosystem globally, in fact. It's not even a Kenya issue or an African issue. The global money ecosystem will still be, the foundation is still banking. Yeah? But then there's a level of innovation that we can tap into because of our dynamism.
Which is what my brother here is talking about, exactly. Layering. So, boss, how do you now move to that next level? and I don't want you to give us your secret sauce, but maybe just give us a snippet in terms of how would you make those transactions free? Look, we all know that at some point,
Someone must pay.
at some point, we are going to have to stop paying for payments. But at some point, someone somewhere will need to pick up that bill. Who is that someone? And who is that something that will pick up that bill?
Fantastic. So I would like to start from where Leon has left. And I'll paint a wide picture of what is informing the kind of strategy we have taken at SasaPay as the next steps for building the payment space. So based on who you ask, people will say that we are still at 90% cash, 10%, others will say it's 80-20, others it will be 60-40. But whoever it is you ask, everybody agrees that cash is still the king. So when we say that we are competing, if we are to think from a blue ocean perspective, there is no need to then keep on going for the same small pie, the 10% that everybody is going for, and killing ourselves there, as they say, the red ocean, when there is a whole big pool here that is still transacting in cash that is untapped. So then the question is, how do we really convince this 60% that is in cash that it is actually good to do it in digital? And it is about asking yourself, what's in it for this person? What's in it for this customer? We are not only now at SasaPay saying that we will not charge customers to send money or to get paid, for example. We are actually saying we have figured a way that this merchant who we give our pay bill or who is being paid by a SasaPay is actually getting paid to do that. And then the question is why and how. Just recently I took my mobile banking and I wanted to, I was going through the features in the bank, and one of the features I saw was a call deposit. They were showing the savings product. I know Ali doesn't like savings, he likes investments, but now they were talking of you can save money here, you can save money here, you can save money. And one of the products they had is a call deposit. And I was curious, I just tried I was now keying in, but they told me on the spot, for you to earn any interest on this, you can only earn interest from this money if you invest 50,000 and above. And then I was taken aback. Wait, you have my money, it's actually seated with you. I know you are trading with it, but for you to even to pay me a single shilling on it, you have to demand that I have to put more. So what is the difference between the 49,999 and the 50,000? Why shouldn't everybody be earning from the retro money they have? And that right there taught me something, that now as fintechs, we have the ability to aggregate all these small monies of customers into one big pool and be able to negotiate with the big boys on a rate that is decent enough, and then through a shared prosperity philosophy, we come and share it back with the customer. So we are not saying that someone will not pay, but we are saying we have figured a way through collaboration with the people who actually need this money, who need it to build more value. We go to them and tell them, look, all my customers have put all this money here. Is this money you can do something with? Yes, I can. How much are you willing to pay for it? I'm willing to pay X. Okay, out of the X, we are actually going to cash it back to the customer. And that way you do not only make it free, you're actually making it more productive even to the customer. Once you fix that side, now go back to the customer and tell them, look, I'm actually paying you to get paid digitally. So why should you then continue collecting money in cash? And even if you collected it in cash, please introduce it into the economy through our agents. Just go to our agent, put that money into your account. What is happening therefore is the money that sits in the mattresses, in wherever people keep their cash, will now start finding its way into the digital economy. And the more liquidity is in the economy, the more banks are able to lend more and to give more products that are going to grow these same businesses. So we are telling the businesses, look, there is a way here that instead of putting the money in your pocket, put it into SasaPay, for example. SasaPay will ensure you get a return on it. And because of the digital transactions we can see, we now bring in that money, that financial institution who is going out to invest back into your business and grow it bigger. So we cannot sit back and cry that the economy is bad. We have to look for innovative way of bringing all this value that is scattered all over into one big pool, a pool that is big enough now to build other products on top of them, be it lending, be it insurance, be it investments, whatever now you want to do with this money, it generates more for you simply because you are putting it into the economy. It is a matter of looking at fintech and saying, fintechs are very well known of innovating on the tech, but we have somehow neglected innovating on the fin part of the fintech. So we are looking now, how can we now become more innovative on the fin of this tech, the fintech part of it, and now build more value, more returns to the customer, to our customers, and that way everybody will win. It's a win-win for all the people in the ecosystem.
Daniel, thank you so much for that elaboration. As we wait for you guys to think through some of the things that we are saying, back to my panelists, and I would like to, for both of you, to discuss the issue around agency banking, and the whole ecosystem about agency, and where we are moving. Now, Leon, you've talked about the fact that, which I am completely aligned to, digital payments are only 10%. And then we have, in Kenya at least, which has the most successful agency banking or agency finance ecosystem anywhere in the world today, we still are primarily a cash in, cash out ecosystem of agents. So you go to an agent, you want to deposit money. You go to an agent, you want to get money out. How do we transform that agency ecosystem to become part and parcel of a seamless digital financial services ecosystem? This agency ecosystem is super important to ensure that we continuously move towards a fully digitized financial services ecosystem. But how do we add value to that agency ecosystem? Who wants to go first? Leon?
I can go first. Interesting question, and thank you for that. I have had the privilege of being ahead of digital in two banks, Family and CDN Bank.
Yes.
And very instrumental in building out what is now PesaPap agents for Family Bank, from conception to the time that we rolled out that. And I think, and I was there at the time when we started agency banking at KCB as well.
Okay.
So I think banks sort of got this right but got this wrong at the same time.
They got it right, but they got it wrong at the same time.
Yes.
Elaborate, please.
They got it right in the sense that they created an opportunity for cash to be mopped out from the market into
the banking ecosystem.
But then the model quickly changed into agents becoming extension of the bank.
Okay.
In the sense that if you look at the transactions that happen in agents in banks today, it's 50-50 cash withdrawal and cash deposit.
So it cancels itself out.
So it didn't arrive at that purpose that was meant to be. So.
And why do you think that's the case? From your hypothesis?
Because we did not create opportunities to make digital payments as banks. Payments still needed to be made in cash. I'll give you multiple examples, and I'll tell you what we are also doing at Flutterwave.
Okay.
So, if you make me move my money into a bank, then show me how I'll use other tools or other channels in the bank to make payments.
Otherwise, I'll just remove
Otherwise,
it.
I'll just remove that money and
When
go
I
make my
need it.
payment cash when I need it. And that's exactly what happened. So we are the first fintech in Africa to roll out an agency network. We have rolled out about 7,000 agents in Nigeria already. We are looking at how we can roll agents in other markets in Africa that we already licensed. For most African countries, you need a separate license to be an agent. And of course, a bank.
Yes. So you need an agency banking
You need
license.
an agency banking license.
Did you need that in Nigeria
Yes,
also?
we did.
Okay.
Yes, we did. We also needed that.
So first you must get a
Payments license.
payments
Yes, we did.
license, and then you must get, so at some point we'll come to that regulatory and
The
policy.
regulatory, yes.
Okay, go on.
So this has given us an opportunity to get our customers, to give them an opportunity to say, okay, I've got this amount of cash and I want it in my Flutterwave for business account. Where do I go? I can go now to a Flutterwave agent
Okay.
in the countries that we are able to do that.
Okay.
Once that money is in the ecosystem, the next step is, how do I use this money while it's in this ecosystem? So we are, and that is why we have onboarded over 1 million merchants so far globally, so that you can use that same platform to make payments to whoever you want to pay to. Understand? So let me give you a very easy example. Events. Yeah? Events is big, and I know there are marketers in the house today, and people who actually do event management. Even this is an event. In the past, the majority of the time it would be, you have to come to the event, pay cash at the door to access the event. And then the event organizers would now take the next step of getting G4S and all these other guys to do their cash in transit, the CIT, to the bank, or talk to the bank to come and CIT that money to the bank.
Mm-hmm.
Today we are telling you that we can process as a fintech. I'm sure Sasa can do it, we can do it. We have ticketing as a service. So wherever your money is sitting, you no longer have to get cash out of that system.
You're taking care of the whole
We're
ecosystem.
taking care of that ecosystem now.
Okay.
And that's what we're saying, that agency banking, now back to your question.
Yes.
Agency by fintechs. If you ask me how can we model it into the future, we should use it as an opportunity to mop up cash out of the cash economy into the digital ecosystem, then provide rails for making payment directly from the digital ecosystems. We should have payment options, whether it's card, whether it's Google Pay, Apple Pay, all those options that are
Complete integration.
so that I don't see the need to go and withdraw cash to make a payment. Yeah. So we have to do it two-front. One, I'll give you an opportunity to mop up your cash into my ecosystem. But then I go as a fintech and integrate with all these merchants that I can think about that you will need to pay for at some point, right? Then you never have to get cash out because you can still go to the same platform, make a payment to Uber, make a payment to Airbnb, make a payment to Netflix, right? Directly from the same ecosystem, because those are merchants that we have. If you think about the Uber, which is pretty much our biggest merchant globally.
Yes.
If you think about Uber, even though we collect payments for Uber, the vast majority of Uber payments are still cash globally. They are still cash.
Why do you think that's the case?
Again, we haven't provided enough rail for you to be able to think about that payment as a digital payment as opposed to a cash payment.
Okay.
Yeah.
Daniel,
over
to you. Anything to add there?
So he has said it in so depth. And he's an expert in agency.
Yes.
So I would say, on top of what addition is,
Yes.
one of the challenges I see with agency banking
Yeah.
is lack of interoperability. So I'm an agent of Bank X, and I'm an agent of Bank Y, an agent of Bank Z. Each of those banks want me to put money with them separate. Then one of the banks...
You have like 5, 6, 10 PDQs.
10 PDQs. Remember, to an agent, the float they put in the bank is like their stock.
Yes.
It costs them money to keep that money there. And they only make money based on how quickly you turn it around, because it's transactional.
So the velocity.
The velocity of it. So if I'm breaking it in so many pieces, it means one day, if Bank X has got more customers, the float tends to maybe go quickly, but there is more money seated in these other banks, which is not generating me any income. So why can't the banks actually agree? We have this one agent, one single float, and then you can serve them all. And that is one of the advantages or one of the opportunities as SASAPay we are looking at and saying we are the most interoperable payment service right now, whereby, as Leon was saying, if you are a merchant and the money is now in your ecosystem, whether you are paid in cash and now you have introduced it, you can now pay to anybody from that wallet, whether into a bank account, whether they want the money into another SASAPay wallet, Airtel Money wallet, M-Pesa wallet. So you no longer need to start thinking, you have to separate these monies. This one is for SASAPay, this one is for going to M-Pesa. It is one single float, and you are able to pay everywhere else. One single agent who can serve any customer from whatever channel they are coming from. That interoperability will now make the agency more profitable, and the more profitable it gets, it means, again, the cheaper it can now get even for the customer at the end of the day. So I think with Leon's input, that's the only one I can add in terms of we ought to make it more interoperable, hence more efficient, and rely a lot on technology to ensure that the safety and everything of the money going through it is guaranteed.
Daniel, thank you so much. I come back to my audience now. Any comments or questions from my audience?
My name is Isaiah Opio from TransUnion.
From?
TransUnion.
TransUnion.
Yes. So my question is, I know before COVID, the government waived some of the transaction costs for money transfer. From where you sit today, and we're looking at a situation where the only way cash can actually compete, and the only way digital money can compete with cash transaction is if we waiver everything. And there's no business, or I've never heard of an NGO that does money transfer, meaning all cost free. From where you sit, and looking at the cost of withdrawal and the cost of remittance, which one would you do away with that would motivate the consumer out there before you talk about doing away with the costs? Which one do you think would motivate a consumer here to feel that at least there's a service? Because consumers are here to appreciate convenience. They're here to appreciate security. They look at it as a cost. And number two, right now, I know there is the conversation coming around regulation. Anytime you tell the consumer out there about digital money, they think about KRA. So how are you going to...
I knew that question was going to come.
Yeah, how are you going to actually safeguard yourself from that conversation? Because out there, last year there was a lot of guys picking up till numbers and all this. But right now, tell them about digital money, they tell you, staki maneno mingi na KRA. Thank you.
That's a couple of questions. Leon, Daniel, who wants to go first?
So I can take the cost one, then Leon take KRA one. Okay.
I'm happy to take the KRA one if Leon feels.
Anyway, so from where we sit, and I'm glad you have given the example of that COVID waiver, that period. Actually, the number of people using mobile money increased significantly. Then suddenly now when the costs were introduced, the number started shrinking. That tells you the story we are saying here, that actually one of the barriers could be the cost, that people don't want to use it. And I gave the example of 1,000 shillings, and it may sound so simplistic, but if you contemplate on that thing so deeply, you see the sense. And that's how the customer thinks. That if I was given 1,000 bob, I'll repeat it, and we start turning it around here, by the time it gets back there, it will still be 1,000. But if I sent this guy to his mobile wallet money, 1,000, and he starts sending to the next person, By the time it reaches at the end there, it will be maybe half of it or less. Every coin there will be some pinching of a bit. So how then do we look at this and look at it critically and say, how then do we make sure that using digital is almost as good as using cash? And the elimination of the costs might be one of the biggest factor. And to be honest, even the market have realized that. I was looking at the history of mobile money, or let's say of digital payments. Many years back, when there was only one bank, I think it was not Absa, then it was Barclays. They had a Barclay card, and they were the first to start issuing POS machines around. And you could swipe your card there, and then you sign a receipt, and then they had to call. It was so technical doing it. And the merchant, I think, was paying about 4%. Then Equity Bank came and started also issuing the POS machine. I think KCB also started, and so on, and the cost started coming down. So then came M-Pesa that started now charging 0.5. SasaPay came, we started charging 0.2. Just recently, Equity has said now we are going to issue the till, kulipwa ni free. It's now at 0. And now SasaPay has come and we are saying we're actually going to pay you something. If you look at that history, every single period, the costs have been coming down. And the same about even now, the pioneer of mobile money really was M-Pesa. And if you think about the cost of the transaction we used to pay then versus what we are now paying today, it is a very fast race towards zero, the rock bottom. They keep going down and down and down. So ultimately, now payers are asking, wait a minute, why should I be paying you to move money? And it's my money, and actually you are the one who benefits when it is in digital space. So what we would do is now again come back to innovation and ask, when this money is in the digital space, what can it actually do? And whatever it is actually doing for the economy, can we now start thinking of paying this guy back, or at least subsidizing their cost using the benefits you derive from having that money in the digital? So for example, today a bank can easily say, it won't charge you to pay because if they want that deposit with them, then they can go back and lend that money at a much higher rate. Therefore, that higher rate they are generating, is it enough therefore to come and subsidize this cost or even actually make it free? So I think your question is very valid and makes a lot of sense in that ultimately it will be a zero. That's why people are saying it's too expensive to actually be sent money via digital. So why don't you make it zero?
Thank you very much, Daniel. Leon?
Yeah, I'm going to make it very short because Daniel has covered. My immediate former employer came up with a very interesting product and stated that sending money is a basic need, and why should you charge to send money? And I think it was a very innovative thing that, of course, it was on the basis of a cross-border payment solution. So obviously you make money off your currency FX deals. But I agree with that statement that it has come to a point where sending money is a very basic need. And therefore, the model, we should rethink the costing model around that for customers. But then I also want to flip the script on you. Cash handling as a whole is a very expensive venture for those who handle cash. It is in the best interest of financial services institutions to move their transactions to digital as much as possible. CIT in itself, people don't think that. The cost of having a teller in a bank, people don't think about that. Yeah? But when you begin to look at the cost of handling money in cash, as a consumer, you may think, okay, it's 1,000 for 1,000. Yes? Maybe it's beneficial for the consumer. But for the eventual handler of that cash, whether it is a bank, whether it's an agent, or whoever it is handling that cash, there is a cost to it. So we may have the cost of technology, but there's also a cost of handling cash on this other side of things. So the question is, how do we balance it out? Because at the end of the day, we may not even be selling you technology, we are selling you convenience. At the end of the day, what we are selling you is convenience more than anything else. And the question is there a cost to convenience? Perhaps not.
So I see both my panelists have avoided the KRA question. So let me jump in and help here. And to turn that question back at you, why are you afraid to pay your taxes? Why are you afraid to pay your taxes? If your problem is how the taxes are used, then deal with the leadership issue. Don't deal with the tax collector. The tax collector is just collecting money. He needs to collect money to make sure the country works. The problem is not KRA. Let's deal with the leadership issue as opposed to the other issue. That is just a symptom of where we are at. Ultimately, we must all pay our taxes.
Actually, I didn't avoid the question, Ali. I forgot because I only had one statement.
Okay, go ahead.
My statement on the tax question is, unto Caesar, give what is his.
Absolutely.
Then hold Caesar accountable for what services they should offer to you. And I think that's where we have the biggest failure. But we all have a tax obligation.
You see, as a business, as a responsible citizen, we must all pay our taxes. And by the way, it's a positive advantage if you have your books clear as far as tax compliance is concerned. I don't think I need to delve into that point further. So digital should not make you avoid paying taxes. Any other questions or comments? We are coming to the end of our panel today. So I will go back to my panelists for their closing statements. I'll then close off and we move to the next session. Daniel, back to you. Your closing comments.
Thank you so much for this opportunity and for the session. I would like to say that we believe that the way we will be building resilient fintechs will be, first of all, being very customer obsessed. Ultimately, the person with the money is the customer. So focus more on the customer and their needs. And whatever little is left, they will actually share with you. Two is collaboration. The best way we can get more from the same customer, even during the tough time, will be when we come together and build something that is so unique, that is so great, adds much more value to the customer. That way they stay longer with you and you become their obvious choice out of the many options out there in the market. And finally is that digital payments, fintech thereof, will be one of the ways that makes the market very efficient. During tough times, again, everybody looks at how do I save costs. So the issue here will be, we can rely on the digital platforms to actually increase the efficiency of how this payments space happens. Recently, I spoke to a bank and I was telling them, bringing back the agency story. Instead of having so many agents across the market yourselves, why don't you ride on the SasaPay agents and the SasaPay merchants across the world, across the country, and they become your agents? It made a lot of sense. So those kind of collaboration where if I've already built some network or some infrastructure thereof, can someone else come and ride on it at a very minimal cost compared to them restarting all over again? And then when we think all these things together from a collaboration perspective, I think we can actually survive the tough times. Finally, let's innovate, guys. Let's think different, out of the box, or rather as if there is no box. It does not have to always be done in one way. Tough times, again, will push us into thinking differently and very innovatively for the sake, again, of adding value to the clients. That would be my...
Thank you so much, Daniel.
All right.
Leon?
Thank you. I'll close my statement. My closing statement will be anchored on two things. One, as we face economic downtimes, as we talk about it, and as we say, the economy, the life of the customer is also changing. Yeah, they are adapting. They are finding ways to cope and survive. Our job is to innovate around the lives of the customers as it's changing, and that's how we address the changes in the different economies, whether it's the Kenyan economy or the African economy as a whole. But I also want to finish with addressing something that Daniel said. Where is the fin in the tech? Yeah? Where is the fin in the tech? We are building the tech. But where is the fin in it? And I'll use some statistics that has also helped us in how we've innovated our business as Flutterwave. The media and entertainment space is a $25 billion economy by itself. Yeah? Whether you talk about events, whether you talk about entertainment in the form of Netflix and all those other type of entertainment, that economy in itself, media and entertainment, is a $25 billion economy. That is the entire TPV of Flutterwave, or total processing value of Flutterwave since its inception. It means that we've only scratched the surface. So there's still a lot more. The e-commerce economy is a $37 billion economy. Yeah? And that includes its physical goods being sold through digital platforms. That's basically what e-commerce is, right? So that entire economy is 37 billion. The remittance side of things, and there are very many remittance players and platforms in the market today, is in itself a $47 billion economy, 10% of which is Kenya. 10% of that 47 billion is Kenya. Another almost 15 to 20%.
We are talking about the African market here.
Yes.
Of course. Okay. 47
billion is just the African market, is into Africa. The Africa travel alone is a $22 billion economy. Another subject that is not widely talked about because Kenyans avoid that subject is the crypto economy. That's a $240 billion.
Let's be clear. It's not Kenyans that avoid the subject. It's the government that avoids the subject.
Okay. Well put, Ali. Very correct. That subject is widely avoided, but it's a $240 billion economy. That means that we, in the fintech space, have not even really begun to address the needs of our customers across this continent in terms of what they need to do with their money in the digital space. We need to offer more than we are offering already. And as economies change, as the dynamics of the economics change in the different parts of Africa, then we have no choice but to build out and to continue pushing what we are capable of. So that's the fin now.
Absolutely. Leon, Dan, thank you so much for spending the time with us here today morning. Thank you guys for being here. This is the first session of the Digital and Technology Week. For me, I just want to close this with just a couple of comments. Number one, digital payments, digital economy is just 10% of what we are doing today. So instead of all of us just fighting for the 10% and forgetting there's a 90% to be dealt with, we haven't even started talking about agriculture, agri-tech, and the huge opportunities that are there. Africa has 60% of the world's available arable land. And yet, a small war in Ukraine, we are already starting to suffer. Food for thought. The other thing I would like us to always think about is, what game are you playing? Are you playing a finite game or are you playing an infinite game? Those are very important questions to ask every morning as we wake up. Last but not least, to remember the oft mentioned and talked about word in Nairobi today. Everything you do, just remember one thing. Vitu kwa ground ni different. Thank you very much. Thanks, boss. Asante sana. Great. Done.